Right now, our next panel is on digital finance, tokenized assets, and asset finance 2.0. And our moderator for this panel wears many hats and brings over 2 decades of international experience as a moderator, keynote speaker, and TV producer. We are delighted to have him moderate our next panel. Please welcome Rob Halop.
Welcome, welcome. Now I'm looking forward to this panel. Please, all panelists, come to the front, have a seat. First of all, it's a great pleasure to be here at Davos Innovation Week. My name is Rob Halop. It's my 5th time in Davos during the WEF. It's always amazing to be here with such amazing people, brilliant minds, good-looking people, and curious people. So in the next 40 minutes, as we already heard, we're going to dive deep into the world of digital finance, or asset finance 2.0, as we'd like to call it. Now, before we dive deep into the topic, I'd like to know who here in the room owns Bitcoin. Please raise your hand. Okay, who here in the room would say he or she is a crypto enthusiast? A little less, okay. Who belongs to the TradFi world? Oh, very few. So the banks, you know, maybe you work for the Fed or the SEC, no? Okay. Who would say I'm the new Finance 2.0 person? Crypto startup or? Okay, a few, not too many, you see? All right, so we hope we bring some clarity into the room with this topic, and it's my very great pleasure to now introduce you to our 5 panelists, starting with our only woman on the stage. Thank you so much for being here. Kat Cloud, you are the head of government relations at SumSub, leading global engagement with regulators and policymakers. SumSub is a global identity verification and compliance platform. You focus on fintech regulation, digital identity, and AML compliance, helping to bridge the gap between government and industry. You bring a practical, policy-driven perspective on how regulation can enable and not hinder innovation. Please give her a round of applause. Thank you. Then, a good friend of mine, we've known each other for maybe 7-8 years here from Switzerland, Mattia Rattaggi. He sits right at the intersection of capital markets, policy, and technology. Over the past decade, he has been deeply involved in translating tokenization and asset finance 2.0 from theory into models that financial institutions, regulators, and governments can actually deploy. Now, drawing on many years of engagement here in Davos, he brings a seasoned perspective shaped by repeated exposure to global policy, market cycles, and real-world implementation challenges. And your work constantly bridges innovation with institutional reality, helping to ensure that new technology receive and can operate within a credible economical and legal framework. Welcome to the stage, Mattia. Next up, we have somebody from Greece, I believe, George Samakovitis. Is that correct? All right. George is a professor of fintech and a trusted advisor to central banks, governments, and standard bodies, including the Bank of England. You are working and focusing on the infrastructure beneath tokenized assets, from compliance by design to payments, stable coins, and systemic risk in programmable finance. Welcome, George. Second last, but not second least, I'd like to introduce you to Benedikt Ködel. To my left here, Benedikt, you lead credit and lending at Sygnum Bank, which is a bank in Switzerland where traditional finance meets digital assets. You bring hands-on experience in institutional crypto-backed lending and collateral management, offering a rare practical view on what really happens when TradFi enters the digital asset market. So we're looking forward to the hands-on and practical view. That's what we need. And you're passionate about bringing or bridging the gap between old and new market infrastructure. Benedikt, you're committed to helping traditional players enter the space, accelerating the mainstream adoption of digital assets. I've been waiting for this mainstream adoption for 10 years. We're going to discuss that as well. Yes, welcome. Last but not least, we have Sunil here next to me, to my left. Sunil Kumar Moharer, you are, as we've heard before, the founder and CEO of Assetance, which is a next generational financial infrastructure platform designed to transform how real-world assets are digitized, traded, and settled. So it's a programmable asset intelligence platform. You bring over 30 years of experience in leadership experience across global investment banks in data, architecture, and enterprise technology. You approach Asset Finance 2.0 not as a simple tokenization, but rather as a fundamental re-engineering of trust, intelligence, and control at the asset level, and you deserve a round of applause as well. So let me give you a little bit of context, as I've said, and I've teased it a little bit, saying, you know, nothing has happened over the last 10 years. That's obviously not true in the space, especially in the last 2 years. I would say that global finance has crossed a quiet but meaningful threshold. Maybe you remember 2 years ago, on January 10th, the SEC approved Bitcoin spot ETFs. That was a big breakthrough, certainly for the Bitcoin world. But BlackRock, you know, kind of turned 180 degrees and now is one of the biggest holders of Bitcoin, owning 700,000 Bitcoins. On the other hand, we had last year in July the Genius Act getting signed by the president in the US and going into law to bring some clarity around stablecoins that are systemically relevant for payment rails. And now currently there is the Clarity Act on the table in the US, being pushed forward to hopefully or potentially getting signed again this year to bring more clarity around regulatory and institutional participation aspects of the cryptocurrency and digital asset world. So the question is not really anymore, you know, do you want to engage in this Finance 2.0 world or not? The question is how? Where are the risks and where are the opportunities? We also just recently heard of Bank of America that is advising their clients to allocate 1% to 4% into Bitcoin. Also, we have JP Morgan now saying that they're using or they're going to adopt blockchain technology. And in the media, Jamie Dimon was very much against it. So I think things are happening behind the scenes and we're shifting from this asset finance 1.0 into the 2.0 world. But the question is also, where are the real world use cases? Now I'd like to know first from all of my panelists here, give me a snapshot of how you feel and how you see the industry, if we call it Asset Finance 2.0, as of today. Benedikt, we start with you in 2, maximum 3 sentences, please.
Thanks, excellent question. So I started...
The microphone a bit closer.
Does it work? Does it work?
Yes.
So yeah, okay. Thanks so much. So yeah, it's an excellent question. When I first entered this industry about 4 years ago, it was very niche-y, and I can really see now that we are developing into something that is far more mainstream adopted, right? We don't see it yet that much with JP Morgan, Bank of America, like you mentioned, but I can tell from the work I do day by day that there are so many traditional financial institutions that are really on one step away of actually getting into crypto in one way or another, be it only offering trading, custodizing digital assets, or my area of expertise, lending against crypto assets. So it's
so it's just starting slowly but surely.
I mean, I think it has been a hell of a trip since 4 years ago. I think 4 years from now we will be probably fully mainstream adopted.
I hope so. Block by block. George, what is your snapshot on the industry?
Thanks. Okay, my headline is under construction. So I would say there is a lot of replumbing. We are, moving towards the next SWIFT, the next ISO 20022, the next whatever the infrastructure is going to take, the shape of. My other headline is that intersection between agentic AI, hence agentic banking, and DLT and programmable assets, and very much on the back of that, what we can see through embedded finance. And my third headline would be new forms of liquidity. So that would be my...
And we'll be discussing those as well here during the next 35 minutes. Mattia, your snapshot on the industry, how do you feel, how do you see the industry right now?
Yes, my snapshot is that we are nowhere where we should be and where we will be, really, basically nowhere. I take a perspective of over 10 years of exposure in the industry. While I appreciate that there has been progress in the last years with some adoption, which means basically taking exposure passive in Bitcoin, do some trading, something like that. We are nowhere in payments, international payments. We are nowhere in tokenization. We are nowhere in commercial ecosystem based on Web3. So we are really nowhere, but we will get there. That's the good news.
That's a very sad statement. We are nowhere. Come on, we've worked so hard here. All right, I'm sure you will get challenged. You will. Yes. We'll talk about it. Okay, Kat, what is your snapshot?
So I think I'm going to steal your building analogy, and I definitely agree. I think we're still in the construction phase. What I find really interesting is that we're now, I would say, almost laying the foundation. So we're shifting the conversation. We're focusing on things around trust. We're focusing on auditability. We're trying to kind of build the governance into it. And I think that's also potentially why we're nowhere where we should have been. Because we have all these brilliant ideas. There's all these different use cases. But unless you have the underlying trust, it's not going to become a mainstream thing. And I think that's also the highlight of seeing JP Morgan Chase, these big institutions that are saying, okay, the trust is starting to be there, so let's start to do this. So I agree. I think we're under construction, but we are going to start going places.
Under construction, but constructing. Sunil, what is your snapshot?
My take on this is, we are on a Ferrari. We are going on 30 miles per hour. Very soon, we are going to race it.
So right now, 30 miles per hour only in the Ferrari.
Exactly.
Is that what you said? Okay.
Exactly.
It's
But
a slow Ferrari, yeah.
But all the signals are moved to green now. So you can expect how fast we can go.
The road is open.
Yeah, that market architecture I can tell, which I agree with them. The simple words, market architecture is moving. So far we have solution architecture. In the Bitcoins we have Axe, and everything is moving on with Genius Act, as you told. And that's the reason we built programmable assets with the Assetens Pro, where you can program rent and other operations you can do, which is in line with the many regulations now. And then the second one is the assetable coin, which I told, which is pegged with your assets, not only with the currencies, but pegged with your assets. So that way your assets leads into a great coin as assetable coin or Assetens coin. And the third one, which you guys told, the payments and settlements are slow. As I told, the red lights are on now. It is turning orange on the payments and settlements. We are on Ferrari. So Assetens Rails, which we built it, is going to move fast.
Okay. Thank you so much. Let's build up on this snapshot and challenge again if we say we are nowhere. If I claim, I allow myself to claim we are entering the asset finance 2.0 world, then, you know, many people see it as a mere technology upgrade. Now, if we talk about a structural shift, would you agree with that? And if yes or no, can you just give us a little bit of an elaboration what that actually means? Where are we with that structural shift? Benedict, maybe you want to start? Or whoever wants to jump in. Yes, Mattia, please.
No, it is a structural shift. It is a very deep one. I mean, it's not only technology. It is technology, but with the technology comes a complete new framework of trust, of building trust. Yes, there is, as you know, I think here everybody knows that you know, the blockchain innovation was in this ability of creating trust between two parties on transacting digital asset without the recourse of a third party that confirm all this. This is a very deep thing, very deep. And once you elaborate on that, you understand that if this is endorsed in the financial system, it means a revolution in the way the financial system is currently structured in operations, in people, in systems, and in regulations and in governance.
So that structural shift is actually needed because the old systems don't work anymore, but we haven't adopted yet, correct?
Well, no, I wouldn't say it doesn't work anymore because it works. It's still a lot. 99% is still TradFi. But we need to make sure that people understand the advantages of the new technology and that we breach into that adoption. which meets resistances, of course, from TradFi for obvious reasons, yes? We need, I think, all the process of explaining. It's almost like the 12 apostles did 2,000 years ago. I mean, we have to go out there and more show the benefits and what it brings and how we can accompany the change. All this needs to be done, as you also said.
George, maybe a structural shift.
Yes, if I can jump in. That's all a very good point. I agree. It is a major structural shift. I want to situate that in a different way. Say, well, I think it's with DLTs and you decentralized finance in particular. Let's focus on finance. It's the first time that we see a technology where the feasible precedes the desirable. What I'm saying is that so far we had problems that we were solving with technology. Now, precisely because it builds around, if you like, a perplexed model that includes the technology, but also the governance and the regulation that can be built on chain. We can do more than what we wanted to do and what we were prepared to do, and hence I think the motto, blockchain is a solution looking for a problem, which has been around for quite some time, and it has been. I think this is where all that comes from. So a major, I think, it's a major shift. It's a new paradigm. Is one where I think also regulators will have to rethink. The cross-border space is changing completely, and I think there is a lot more in the programmability of assets and in how, for instance, we embed features like compliance onto the assets, so that would radically transform the process of regulation, turning regulation in essence into a feature instead of a process. So that's my take.
Thank you, George. Benedict, you like the practical hands-on point of view. Can you give us a little bit of hands-on practical point of view in regards to the structural shift? And you working at Signum Bank in Switzerland, how do you feel that structural shift also in terms of demand from clients?
Yeah, so I think most of our financial...
If you can bring the...
Most of our financial system is built not for this century. I think we are facing challenges in finance that are of this century with TradFi solutions that are a century old probably. Sorry. Practically, I think the main change I see that most of my TradFi colleagues are puzzled with is the fact of 24/7, 365 liquidity, tradability of assets, right? It's changing the way we do risk management. It's changing the way we look at loan to value, we look at price slippage and all those things where risk management frameworks from TradFi just don't work anymore.
I just want to pick up on the 24/7 because I completely agree. And I think it goes back to just consumers by nature have changed and what their expectations have changed. I think traditionally we look at TradFi, and not to be mean to any big banks that might be in the room, but you weren't necessarily putting out products and services to help your consumers. You were just putting out products and services that you had to. And I think we see the fundamental shift is that consumers are like, actually, I have the power to, if I want to move to a different bank account, or if I want to kind of streamline how I'm holding all of my assets, they now have the power in their hands to actually do that. So it's a genuine shift because the person who's actually in charge now is more now the consumer. And we are also changing in that we're 24/7. So you're not just getting where, okay, I'm only going to be banking on the US time zone. I'm actually I can now access and I can bank in Singapore, or I can bank in all these different countries. So by nature, the thing that's really kind of driving a lot of these changes and the fundamental shift is the fact that consumers have fundamentally shifted.
And since you just mentioned this, I mean, you deal or you talk to policymakers, regulators a lot, and if we think that the law is lagging behind and the last thing to get implemented, where are we from a regulatory point of view in terms of that shift?
I think we're seeing a lot of regulators, and I think this is a huge applause to them, and some people might disagree with me. We're seeing more regulators are starting to understand that, and a lot of them are at least what we're seeing, and in my day-to-day role, I'm seeing regulators that are reaching out and saying, you are a RegTech. So SumSub is not a regulated entity, but we are a RegTech. And they're like, we want to understand the technology. We don't want to just understand and write the regulation. We want to actually say, this company uses your solution. How do they use your solution? How are they using you as a third party to then comply with all of our rules? So I think the regulators they're also seeing that shift. They're understanding that I can't just say, okay, I'm going to create regulation. This is what it's going to look like. It's going to solve the problem. They're taking a step back and saying, okay, I need to understand that businesses work not just singularly anymore, that they're outsourcing things to third parties. So I need to build a relationship with the technology providers, because that's the thing that actually worries the regulators, is the technology. So if they understand that, then they'll be able to make and write better regulation.
Sunil, structural shift in the market with Finance 2.0?
Yeah, first of all, to answer your question on the regulatory shift as well, then I will go to the different example. Let me go back to the Ferrari example. Yeah, we don't think, for example, if you have a red light or a traffic rules, that is for your benefit. Same way, when you are driving Ferrari with so much fast, there is a speed camera that is for you. Think the regulator like that. This is for you. So whatever finance structural shift is, the regulator is coming with new actions, new regulation, that is for your benefit. So on a positive way, you can't drive Ferrari with 120 miles per hour when the school is there nearby. So the regulator comes with a traffic light or a camera. So this is for us. And the compliance, the mirror is there on your Ferrari. There is another mirror, small mirror, because you need to watch out more. So regulation, compliance, risk and audit. In the Ferrari, you may have some feature, but you need to be very careful to drive more fast. On going back to structural shift, yes, the control is shifting from institutions to rules. The control is shifting from institutions to more of a programmable things, whether it is a blockchain or anything, so which is a good thing. And also it is controlled by many people. Not only power is dissipated to one institution or a bank or a regulator. So it is all programming now. So, for example, you want to add something on a regulatory side, you are welcome to add on a program. So that is a great structural shift now. And the second thing, which is on the settlements and payments, which is very slow, which you rightly mentioned, there are many, many payment gateways are coming, whether with different countries are coming with different currencies and stable coins, and a lot of compliance and regulations are coming up with the new acts, which is a good news. That's the reason we are completely having a structural shift from slow pace to fast pace. I think the AI and other technologies, programmable things, which is Assetance Pro, which we built, not only you can own or rent, now you can do 50 plus programs, which is controlled by new compliance laws with the blockchain, where you can configure by yourself. And also, regulators are coming into force. If this is not correct, you need to take it off and you need to put it somewhere. So we need to look into many, many ways. The structural shift is moving fast very soon.
If we talk about this shift, it's about change, also being open to change. I'm sure there's a lot of players in the industry who feel threatened. Who are the benefiters? Who are the ones who feel threatened? And how do they need to maybe change their mindset to open up towards this shift? Who are the threatened ones and who are the winners? And how can they collaborate? Any opinions?
Can I take first, if you don't mind? Yeah. I think the slow pacers are losers. For example, if you have a very slow pace mind thinking process of any institution, they will lose a lot. And the middlemen and who take a lot of commissions, they will lose. So the players who will win is the fast pacers and who thinks very positively, very fast. For example, you're the same Ferrari example. Who will win it? When the school is coming up, they slow down. And when the school they passed, when they see the open ground, so you think very positively and you go fast when it is required. They are the winners. And also, who takes the control of the market, or who takes the rules and regulation and the bills, and they vote more and participate like Architecture Design Authority in our banking regulation. So they are the winners. And the newcomers, like any new banking thought process, like Assetance or Bitcoins or many other coins like stable coins. So where they mitigate the risk in a different way. Very soon, they come up with the compliance and regulation, but they will be the winners. That's what my thought process.
Can I just add one example to that?
Of course
I
you
think absolutely agree with you, Sunil. I think we're already in the transition, and we already see some winners and losers. I mean, there are examples that, for instance, recently I read that remittances, for instance, from the US to Mexico and other countries are already shifting heavily to stable coins after the Genius Act. So I think we're already seeing the winners and losers. And I can only repeat what you said, Sunil. It's the winners are going to be the ones that innovate, and the losers are unfortunately the ones that are not going to be innovating, in my opinion.
Yeah, if I
Yes.
may build on that, I agree. I think we must be all, in agreement here. If the whole thing needs to make sense, this blockchain and technology and new trust mechanisms, it is only because there will be an advantage for the consumers, for the investors, let alone the society. Yeah, this is important. So we have to make this very transparent. And the advantage must come in terms of liquidity, in terms of returns, in terms of transparency, in terms of risk, maybe, which looks out better managed. This is my key point here. We need, must be the winner. They must be the winner.
All right, so after we agree that this is a structural shift in the market happening, there always will be losers and winners, as in any other industries as well. Let's talk hands-on again, Benedikt, and everybody else in the panel, about tokenization, right? It's a big word. You can tokenize houses, you can tokenize art. Well, can you? Where are we with tokenization? And is putting something on chain often fails to create liquidity. So where are we now with tokenization? And we've been talking about it for a long time as well. But there's people like Larry Fink from BlackRock that says, everything will be tokenized. So it seems like big, powerful people in the industry have a very clear opinion. So what is hindering that tokenization? Is the technology not good enough? Is it regulatory aspects that are not in place yet? Where are we with tokenization of real-world assets or any financial assets?
Yeah, so we'll not talk about the regulatory part, but my opinion is that tokenization is obviously an amazing thing to fractionalize assets and to facilitate tradability. However, tokenization does not come automatically with liquidity. We still need to find someone to buy that tokenized house, or if you want to tokenize it, bring a new token to the universe, you need to still convince people that your token is going to be the one that they should invest into. So I think, yes, it facilitates to pass an asset from one person to another, but it doesn't create liquidity automatically. And we still will face the same challenges or similar challenges like in traditional finance to basically convince someone to buy the house or the share or whatever you're tokenizing.
Kat, do we need first a regulatory framework in order to be able to tokenize assets?
Yes and no. So I think, and going back to kind of what I said as what was my kind of view at the beginning, was what we're really starting to see, and kind of I think the reason why we're not seeing that liquidity with things that have been tokenized is there's still that element of trust. There's still a lot of questions. And I think it's wrong for people to think that, oh, if I regulate it, therefore I get trust. That's not the right approach. And I think that's the approach regulators have taken previously, and it's not the approach that they can take to kind of regulation more generally going forward. And we've seen challenges, and we've seen kind of a shift in that approach with some of the recent bills we've seen across the globe, with like MiCA in the EU, with Genius Act in the US. So I think the big, to directly answer your question, I'd say it's not needed, but it definitely does help. As long as the regulator knows and understands the market and is focused not on creating it, making it overly burdensome, allowing the innovation to happen, knowing that consumers do want to interact with this. So understanding that, okay, I need to have some protections in place to make sure consumers are not losing their entire savings or things like that, but make sure there's proportionate protections in place, and then you will start to understand and build the trust, and we will start to see a trend of more and more things become tokenized. Like one thing I would personally love is if we could tokenize identity to make that easier and faster across the world.
I'm gonna be like fractured and what you can kind of buy a piece of me then if I'm a token as Rob, or how would that work?
Definitely not, no. It'd be more...
You can invest into me, you know. I'm very cheap. No, I'm not. I'm expensive.
It would be more allowing identity to be part of the on-chain process. So when you do actually want to
understand.
purchase something, so let's say I wanted to buy your tokenized house, but going through those kind of background checks and making sure that I am Cat Cloud, if we could put the identity verification element onto the chain and make that part of the tokenization journey, not buying parts of me, but just streamlining that process, it also would then help to build in the trust element. Because again, you would then trust and say, yep, I know this is Kat, so she can have my tokenized house. So
Okay.
it's adding it to kind of that layer of trust and building it and also streamlining it.
George, what do you say about
if I-
tokenization?
Yeah, well, if I may, I think, well, first of all, it's usually that conflation of terms. Tokenization has been around before blockchain, so it's the idea of creating the digital twin as opposed to what we mean today. But I'll go back to Benedict's point about it's not so much about the tokenization capability. We can do that. It's about the fractionalization, and here is where, as a technologist, I think it's a regulation issue. It's clearly for me, because I go back to my original point of the blockchain being disruptive as an innovation, because the feasible precedes the desirable in that sense. So what we can do is a lot more, and I think what is needed for that fractionalization to take effect is the trust and the framework that will actually allow for that to happen. You can do it. The question is, what is the value of that, and will it be adopted? Innovation is about adoption.
Okay, so if the Clarity Act comes through in the US, that would be a big major step forward to start tokenizing?
Well, yes, I think. Okay, there's a lot of second readings, if you like, to the Clarity Act about how that will affect liquidity, especially in real-world assets tokenization. My personal position is that it might be, not a step too far, but a bit too quick. I think it may, have to go back. But yes, I mean, it is moving. It is sending this kind of signal.
It's part of the big
market.
picture for
Yes.
sure. Yes. Sunil, you wanted to mention something?
Yeah,
And then we can have Mattia.
I agree with him a lot of points, but let me add one more thing. For your example, can I buy a burger for you? If you have a stable coin, let us assume, which is tokenized, and it is pegged with a currency. If the currency value is going up, we don't know. So today, for example, you have a tokenized coin, I can buy for you. But at the time of buying that burger, if the value is going down, is everyone thinking? That's the reason we have created acceptance coins, where if your currency goes down, our coins is collateralized with your assets. So now I am guaranteed that if I buy a burger with the coin, which is collateralized with the asset, even the value goes down, to some extent I can cover the cost. That's the way acceptance coins comes into picture. To answer another point which you mentioned, I agree with all of you. Even the Clarity Act comes into the picture, and that act is only towards to some of the coins, which is pegged with some currencies only. So the regulation starts kicking off is a first step, which is a good step, which I mentioned about traffic light and other complaints. But also, we need to make sure to have collateral. So, for example, if the currency goes down with any other currency, every coin is collateralized with the currency only. So if the currency goes down, what is the collateral, or what is the risk framework you have? How you are going to settle? How you are going to reconciliation? Is the acceptance coins and acceptance rails will do. There is a lot of policies and procedures we design, including most of the governance acts and compliance procedures, audit risk we have carefully drafted. That is a solution we are going to provide.
Thank you so much, Sunil. Mattia, you still stand for we are nowhere. Where is tokenization and what is holding back tokenization to become mass adopted?
Yeah, I'm keen to complement everything that has been said, which was, in my view, very much correct, by saying that I think a crucial aspect is that we miss a key enabler for tokenization, which is a marketplace. Yeah, so there is a key infrastructure that is missing. Here is a marketplace. I would buy 1 cubic centimeter of view in token if I know that maybe in some months, if I want, I can get rid of it, yeah, in exchange of something else. Now this market doesn't exist yet. The regulatory conditions exist in some countries, but it doesn't exist. Until this doesn't exist, the liquidity cannot explode. It remains constrained. It remains theoretical. So this for me is a key enabler which is missing. We should work on it.
In terms of real use cases, give me a real use case or a use case that is working right now, or what are the next or the first 1 or 2 that will work?
For me, the use cases now become, depends on the attractiveness for the consumers. So I would distinguish between the tokenizations that have got a revenue attached to it, an income flow, from those that don't. Those who have, like real estate, that are probably going to be the first that will become very popular because you can actually have an income. I would be happy to have a cubic centimeter view with an income attached to it every month. Then I keep it, maybe. I don't need infrastructure to be very well developed in terms of market. So it's a very normal discussion about exchanging financial instruments. That's all. It's all about that, I think.
Yes, George, did you want to add? Or okay, so I'd like to know, again, how does Finance 1.0 and 2.0 need to collaborate and bridge in order to make this work? Again, I think we have the regulatory framework. So yes, it's part of it, but it's not the only hurdle. Institutions are coming into the space, Bank of America, JP Morgan, big asset managers like BlackRock. So what is really missing, or what is it? Is it maybe the collaboration is missing? Is there not enough trust between those entities? Do we need to collaborate and work together more rather than fight each other and feel threatened? Or what is, because the technology seems to be there, right? The market isn't there. You've mentioned the market, some regulatory aspects, but it seems like not so much is missing. So I would argue that maybe the consumers aren't really educated enough and know enough about it to end up like, who pays with Ethereum or Bitcoin when they go and buy a coffee? You do? Where? You don't. No, I would want to know who is using crypto for payments. It doesn't work. It doesn't work? It's not. So what do we need to do so it works? Because we've been talking about it for 8 years here, or 10 years.
I think.
I'm sorry for
jump
this
in. No, it's okay.
provocative question.
Yes, no, it is. We love provocative questions in this panel, I think. I mean, what's missing is the trust framework, I think, and also the fact that not everybody is jumping on the same, on the same game. Is that we're still at the stage of competition, so this is a contested space. So I don't think that. The market, the market that doesn't exist yet, I don't think that the players are in a position to say, okay, let's, hold hands and let's make that work.
So when you say trust, who needs to trust who? Who doesn't trust who?
No, well...
Everybody needs to trust each other? Consumers
no,
need to trust the banks need to trust the...
Again, that's more of a... what I'm talking about, what I have in mind more is more of a, trust-based framework, something that will allow, the governance of the transaction ecosystem to allow people to trust, institutions and consumers to trust the chain, trust the protocol, trust something, but we're not there yet.
So it's also trusting the blockchain, the technology itself, right?
Yes, it's what I sometimes ironically call trustless trust.
Yeah.
So you have a trusted framework, but without the the active action of having to establish yourself as a trusted party because there is a trusted proxy.
Well, we have another 4 minutes left, and I would like to get. I'm sorry, we have to finish the panel. I would love to talk for another hour. Let's get a snapshot, from each one of you, and maybe tell me what you wish to happen in the industry, so we can move forward and get into that mass adoption phase. We start with you, Benedikt, in a few sentences. What are you hopeful? What is your wish?
Few sentences. Yeah. So I think I hope we get a bit more of regulatory clarity and alignment, cross-national alignment. But again, I'm very positive on us, hopefully in 4 years, having a far bigger room here, where most of the traditional larger banks will be represented, speaking about crypto and its benefits.
All right. George, what is your snapshot? What do you wish for the future?
All right, I wish for the future to be one where, well, or at least it's not so much a wish as a, more of, well, I wouldn't call it foresight, but, the ability to have, cross-asset exchange, direct cross-asset exchange, the ability to allow what I'm currently working on, which I call embedded compliance, the on-asset embedding of compliance, so that the assets themselves are aware, if I'm allowed to use the term, of the regulatory space that they are compliant to and what they can do in, which will turn regulation into a different game, and it will allow regulators a lot more than, well, turn their job more into the supervision role that they have, rather than having to deal with the process of compliance. I mean, I heard people speaking about KYC and how, I wish for this to disappear. There you go. That's my wish.
Okay, in a nutshell. Mattia, what is your wish for the future in this industry, so we can finally
one element I feel to mention is the user friendliness. Could be much improved, so that the people will not see too much the technology and get scared with the strings of character, but being able to access the benefit of Web3, without this complexity. I think the producer of this technology still believe that complexity is sexy and sells, but I'm not sure. I'm not sure. We should probably simplify that if possible.
Sounds good, simplifying things. Kat, what is your wish for the near future?
So I'd say near and far future, I don't want KYC to go away. I think, if anything, I want KYC to be streamlined. So I think it's very important, and that's where we start to get the trust, is again, because you have that transparency of who you're interacting with. You know that if you're going to be purchasing something, that the money's going to end up in my account, that I'm actually going to be able to receive the good or receive whatever it is that I'm purchasing. Because ultimately, that's what we're all used to. That is TradFi. That is the basics of it. And I think we need to take that principle and then infuse it into Finance 2.0. And it's really, again, it's based on kind of doing the KYC, streamlining it, making it so that people can trust that whatever interaction or whatever money they're transmitting, that they actually know they're going to get it. And they can trust the person on the other end of that, and they know that the transaction's going to work.
Thank you so much. Last but not least, Sunil.
Yeah, going back to my Ferrari example, you need to think everybody should drive Ferrari. And you need to...
At which speed?
Yeah, at whatever speed, whatever way, which regulator tells, because you need to follow the traffic lights and speed cameras. The trust factor which you clearly mentioned, it must be transferable, it must be programmable, it should be not controlled by one institutions. So that way, the trust will be marketed towards to many people. So you should adopt the framework, as I mentioned. Everybody should drive Ferrari, not only you, because that's the reason if you see some of the institutions hold a lot of coins, but nobody's trading because everybody thinks that's not for me. No, you need to adopt the mindset that everybody should drive the Ferrari, create a happy world. Not only you, everybody should be happy, so entire world will be happy. That's the way you need to build the trust.
Thank you so much for those beautiful words. I really hope that we won't drive all a Ferrari next year here in Davos. Well, again, thank you so much to the panelists. Thank you so much for listening, and we'll be up with our next panel in a minute. So thanks again. Give them a big round of applause. Again, thanks.
Thank you so much.